Hi, it's Michael Abbey with Enterprise Express Tax Service. Here today, I'm going to talk about the tax credits that are available if you purchase an electronic vehicle or a plug-in in the year 2023. Um, you may also qualify for a tax credit if you purchased a vehicle prior to 2023, like say 2022. So let's look over the few qualifying factors that the IRS has um, for this tax credit. If you buy a new plug-in vehicle or a fuel cell vehicle in 2023 or after, you may qualify for what's called a clean vehicle tax credit. Um, this you may qualify for up to $7,500 under the Internal Revenue Code if you buy a qualified plug-in vehicle or a fuel cell electric vehicle. This is primarily due to the Inflation Reduction Act of 2022, which kind of changed the rules for this credit for vehicles purchased from 2023 up through 2032. Now, the background behind this is that the Biden administration wants to ensure that the country as a whole is on a road towards less fossil fuel consumption, which in turn impacts the environment. And this is why they're going to these lengths to ensure, rather to encourage people to purchase electronic vehicles or plug-in vehicles. Now, bear in mind, some vehicles do qualify for this, some will not qualify. So let's take a look at some of the qualifying factors in this. Now, to qualify, you must buy it for your own use. So it's got to be for yourself. You cannot purchase the vehicle for someone else's use. It cannot be for resale. So you can't purchase the vehicle with the intent to resell it for profit or whatever. Also, you cannot export this car. So it must be primarily for use in the United States of America. So those are the two main qualifying factors. In addition, and this is pretty important, your modified adjusted gross income, being your income after all your deductions, right, may not exceed $300,000 for any couple filing jointly, $225,000 for anyone who is filing head of household, and all other filers like single, married filing separate, a qualified widower, your income cannot exceed 150,000 for all other filers. So once again, I'm going to go through this because this is pretty important. Um, in order to qualify for the $7,500 tax credit for purchasing an EV vehicle in the year 2023, your income, if you're married filing jointly, cannot exceed $300,000. If you're filing as a head of household, it cannot exceed $225,000. And for all other filing categories, like married filing separately, head of household, or single, it cannot exceed $150,000. You can use your modified adjusted gross income from the year that you take delivery of the vehicle or the year before, whichever is less. So they give you some flexibility here. It could be that you could use your AGI, your modified adjusted gross income, from the prior year or the year in which you take delivery. So that kind of gives you some flexibility. Um, the credit is non-refundable, meaning that you cannot get back more on the credit than you owe in taxes. What that means is, let's say you file your tax return and you owe $5,000 in back taxes, but you're getting a credit of $7,500. You can only apply $5,000 of that credit towards the taxes that you owe. You will not get the balance as a refund. That's what a non-refundable credit means. So that's a bit of a bit of a negative, but the plus side is that the credit can be used towards taxes that you owe. It's just that if there's a balance, you will not get that as a refund. Okay, some credits are refundable, some credits are non-refundable. This particular credit is a non-refundable tax credit. All right, now, how does the vehicle qualify? Well, it has to have a battery capacity of at least 7 kilowatt hours. And that's something you might want to discuss when you're purchasing the vehicle, or discuss that with a salesperson. It has to have a battery capacity of at least 7 kilowatt hours. Most modern electronic vehicles, plug-in vehicles, have a battery capacity of at least 7 kilowatt hours. So I think that's a pretty easy qualification. Secondly, it has to have a gross vehicle rating of less than 14,000 pounds. 14,000 pounds is a lot. So that pretty much means it can be an SUV, it can be a sedan. Certainly, it can't be a heavy, heavy truck like a semi or something like that. As you guys probably have heard, Tesla is producing, or has produced, an electronic vehicle that is a semi truck. And if you've noticed more recently, Amazon has these electronic vehicle vans, or big trucks that they use to deliver packages. So those are on the bigger side. Uh, the IRS is really talking about smaller size vehicles, probably lighter size SUVs and sedans, and so on and so forth. Also, to qualify, the vehicle must be made by a qualified manufacturer. So it's got to be made by, you can't make this a vehicle in your garage and sell it to someone and have it qualify for that tax credit. It's got to be made by a qualified manufacturer. General Motors, Chevy, Tesla, like that. And this is very important. This is very important. It must undergo final assembly in North America. Now, this is where it might get tricky, because you've got car manufacturers like Hyundai and Kia now who are making electronic vehicles. Not all of them are being made. Some of them are being made in China. Some are being made in South Korea. But this says that it must undergo final assembly. The key word here is final, because you do have some car manufacturers now who manufacture the components of the car outside the United States, but then they ship those components to their assembly plants in the US and have the final assembly in the United States. I believe Toyota does something like that with their plant in Alabama, and I believe Honda does the same. So a lot of car manufacturers do this, and it passes this test of having undergoing final assembly in North America. So that probably is not going to be as much of a problem as one might think. All right, the sale only qualifies under the following conditions. One, you have to buy the vehicle new. So you cannot buy a used electronic vehicle, EV or plug-in, and get this tax credit. It has to be a brand new vehicle. The other qualifying factor here is the seller has to report the information to you at the time of sale and to the Internal Revenue Service. Um, for the IRS, to enable you to be eligible to claim the credit. And there's forms that need to be completed when you do your taxes as well. I will go into that later. But the seller, the manufacturer, whether it's GM or Chevy or Tesla. By the way, some Tesla vehicles do not qualify for this credit, but I'll deal with that in another video. But the seller has to report information to you at the time of sale and to the Internal Revenue Service. The seller is required to report your name and your taxpayer identification number, your social security number, to the Internal Revenue Service for you to be eligible to claim the credit. In addition, the vehicle's manufacturer suggested retail price cannot exceed, this is important, it cannot exceed $80,000 for vans, sport utility vehicles, and pickup trucks. And if it's any other kind of vehicle, it cannot exceed $55,000. So there are a lot of, if you plan on taking this credit, which I assume most people will, there's a lot of detail that you need to look at prior to your purchase. And this is the reason why most Tesla vehicles, and there's another manufacturer called Lucid, a lot of those high-end EVs will not pass this test because of this price criteria. $80,000. A lot of the brand new high-end electronic vehicles like Teslas have a price, a manufacturer suggested retail price that exceeds $80,000, not to talk of $55,000. You may have the smaller size Teslas, the Tesla 3 or the Tesla Y, that might fit into the $55,000. That's possible. Um, you may notice that a lot of the manufacturers, Tesla for instance, has recently reduced their prices. I strongly suspect one of the reasons is so that they can fall under this guideline in order to up their sales. So that is a very strong possibility. All right. Um, how do you claim the credit? Well, you need to provide your VIN number, and you also, and I'm just going through my notes here, you also would need to fill out a form. There is an IRS form that you need to fill out when you are doing your taxes. Remember that the information when you purchase the vehicle, the information has already gone to the Internal Revenue Service. It's a requirement that the seller sends that information to the Internal Revenue Service, providing your name, your social security number, and all other details. And so when you're doing your taxes and you complete the forms for taking the EV tax credit, that information should already be with the IRS. So all you're doing is you're confirming that information. Okay. Um, there are credits for vehicles that are purchased in 2022 and before, and we'll just go real quick, go through that. If you bought a new qualified plug-in electronic vehicle in 2022 or before, you might be eligible again for a clean vehicle tax credit. It's called a clean vehicle tax credit, all right, of up to $7,500. Again, it's the same, $7,500. The credit equals $2,917 for a vehicle with a battery capacity of at least 5 kilowatts. So a little bit different here. Remember, for 2023, it has to be up to 7 kilowatts. For 2022 and prior, it has to be at least 5 kilowatts. Plus $417 for each kilowatts of capacity over 5 kilowatts per hour. So it gets a bit technical here, but the main thing here is that the battery capacity is at least 5 kilowatts. The maximum credit, again, is $7,500. It's non-refundable, just like in 2023, so you can get back more on the credit than you owe in taxes, and you cannot apply any excess credit to future tax years. So you can't roll this over. It stays there for that tax year. Who qualifies? You may qualify for this credit for buying a qualified new car or a light truck. The credit is available to individuals and businesses. Very important. The credit is available to individuals and to businesses as well. It's got to be for your own use, not for resale, and for use primarily in the United States. So just remember, now I'm talking about electronic vehicles purchased in 2022 or before. Okay, some very slight differences. The most important being that the battery capacity of at least 5 kilowatt per hour for 2023. Battery capacity has to be at least up to 7 kilowatts per hour. All right, which vehicles qualify for purchasing or getting this credit for cars bought in 2022 or before? Which vehicles qualify? To qualify, a vehicle must do the following. It must have an external charging source. So if you notice, if you walk by anyone who owns a Tesla, you notice those long charging cords in the garage that are plugged into what looks like the fuel tank, but it's really plugged into the battery to charge it. So it's got to have an external charging source. The vehicle has to have a gross vehicle weight of less than 14,000 pounds. That's an easy qualification to meet, because 14,000 pounds is a lot. Most average vehicles weigh between 3,800 and 4,500 pounds. So 14,000 pounds is a lot, okay? And by the way, you can find your vehicle's weight on the vehicle's window sticker, okay? But these days you can research it on Google as well. Again, the vehicles purchased after August 16th of 2022 have a new final assembly requirement, which we talked about when we were talking about the prior, the when we were talking about the tax credit for 2023. This is what it says. If you buy and take delivery of a qualified electric vehicle between August 17th, 2022 and December 31st, 2022, the same rules apply. Plus, the vehicle must undergo final assembly in North America. Must undergo final assembly in North America. I explained this before that most car manufacturers now, what they do is they'll ship the components. The components are made in the foreign countries like Japan, South Korea, China. The components are shipped to North America and the car is finally assembled in North America. That's what most manufacturers do now. So this is not going to be a hard requirement to meet. Now, this is something that's pretty important. Purchase date versus delivery date. If you entered a written binding contract to buy a vehicle before August 16 of 2022, but you took possession of that vehicle on or after August 16, 2022, and before January 1st of 2023, you may claim the credit based on the prior rules and disregard the assembly requirements. So that's quite important. If you entered a written, like you signed a contract to buy the vehicle before August 16, 2022, but you took possession after August 16, 2022, and certainly before January 1st of 2023, then you may claim the credit based on the prior rules that did not require the vehicle to be finally assembled in North America. So that's a pretty important distinction. Okay? So that's what I pretty much have for the purchase of electronic vehicles and the tax credit of $7,500. Like I said, you are probably going to notice that a lot of the car manufacturers have some of the mid-tier or even lower end models are going to be priced below $55,000 just so they can get an uptick in sales, because people are going to a lot of people are going to be encouraged to buy electronic vehicles in lieu of getting this $7,500 tax credit, in addition to the savings for gas as well. So I hope this helps. Once again, my name is Michael Ogechi-Abbey with Enterprise Express Tax Service. We do taxes for the entire 50 states in the United States. We operate a virtual office. We have a physical office, but we have become so adept at doing taxes virtually that most people we deal with just want to upload their taxes to our secure portal in the cloud and have us do it virtually. It saves them time, saves us time, and it's a seamless experience. So please do get in touch with us if you have any questions. Bye.